Yo, yo, yo. Welcome to Forex.Today. Booyah. All right, let's get on with it. Let's get on with it. We got a super amazing week ahead of us. Absolutely incredible. So much, it can even, it's so much. Hundreds of companies are reporting. Hang on. Yeah, wow, something. Anyways, hang on. All right, so anyways, yeah, let's get on with it. So we got a lot to do today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We got a lot to do. Like I said, we got multiple central banks reporting. Why do they have to call me now? Multiple central banks reporting. At the end of the week, we have an embargo on Russian oil. We have non-farm payrolls. We have weekly jobless claims. We have JOLTS. We have ADP. The Fed meeting, is obviously a big deal. Tuesday, we have dozens of companies reporting, and that's not even everything, right? Again, Bank of England, ECB, like, holy smoke, OPEC, thank you. Just absolutely amazing. So get ready for a wild ride. Be careful with your trading. Make sure you use stops, all that kind of stuff. In the description below the video, there's a link to tradersway.com. There's a link to fxbootcamp.com, and there's a link to amazon.com. Well, what are all those things for? The one to Amazon is just simply to my book. You probably bought it a decade ago, Strategic and Tactical Forex Trading. I'm in the process of writing a new book, so if you could, would you leave a review of the previous book? That'd be great. FX Bootcamp is an organization that I've been running pretty close to 20 years now. And over the 20 years, I've been asked a lot of questions. Wayne, how do you do this? How do you do that? Well, we have almost 100 hours of training videos to address all those concerns. We also have a day trading group and a swing trading group. It's incredible. So you should join. That's a place to get some real serious help. For example, if you're in the swing trading group, you meet Tuesdays and Thursdays with a coach. Tuesdays and Thursdays. One is strategic and one is tactical. You're really going to get some help there. So anyways, and then tradersway.com, an ethical foreign exchange broker, trustworthy, a business model based on a symbiotic relationship with you. They actually execute your trades into the interbanking system. That might not sound like a big deal to you, but let me tell you, I've been doing this a long time. That is a big deal. They're fast, they're affordable, they're trustworthy. Give them a chance. Tradersway.com. See if they can earn your loyalty and respect by opening up a demo account. And then when you're ready to trade real money, if you trust them, you'll use them. Just going through the calendar, let's see if we can get any of this. Today is a little bit light. GDP out of Germany. Okay, that's great. But then moving on to Tuesday, there is a lot going on. Okay, German sales, German unemployment, Eurozone GDP, Kiwi jobs. Okay, a lot going on there. What you don't see on this Tuesday is in the United States. Maybe I can add low in there and see if it throws it in there. But there's a lot of earnings coming out. Lots of corporate earnings coming out in the United States, and could be a market mover. Let's see what else is in there. Italian unemployment. Just a lot. Case Shiller, okay, that's interesting because we are somewhat sensitive to the housing market. Now, when interest rates are going up fast and furiously, housing stock, in particular housing builders, were getting crushed. Because who wants to build a new house when interest rates are going to infinity? Well, right now the market's been priced in that the Fed is near the end of their rate hiking cycle. And guess what? Those stocks are way up. And to give you an example, I bought a couple of different things. Back when the net asset value, the stock price was less than the net asset value. What does that mean? Well, if the company is worth at least the value of all the assets it owns. So imagine that builders have to buy land before they build houses. And so if you added up all the value of the land, you could place a value on the corporation. Just the value of the land, net asset, the assets, the value of the assets, right? So if they owned $1 billion of assets, well, maybe they also have some sort of alpha, some value creation on top of that, right? But you could say, well, what is all the land that they own worth? Let's say it's $1 billion worth of land. Well, what if the company was only worth $750,000 if you added up all the stock? You're like, well, that doesn't make any sense. How can the company be worth less than its assets? You see, it doesn't even make sense. Well, because the sentiment of the market was so bearish that they got crushed to the point where it doesn't make sense. It was the same thing like when I bought Apple Computer back in 1920. I bought Apple Computer for $6. It was the first stock I ever bought. I learned how to do my multiplication tables on an Apple IIe. So I had some loyalty to Apple. And I wanted to become filthy stinking rich one day. And I didn't know how to do that, but I knew rich people own the stock market. So I'm like, I guess I should own some stock. What should I buy? And I'm like, well, I only really know Apple. Right? So I looked at it and found out that the company was worth less than the amount of cash they had in the bank. So they had I think it was $200 million of cash, and the company was worth $110 million. I'm like, how could you could just buy Apple and double your money by just laying everybody off, selling any assets you have, and pocketing all the money and just be done. So I'm like, that was the first stock I ever bought. And I held it for 30 years or 25 years. I bought it for $6 and I held it for 25 years. Yeah. But anyway, so going back to the housing thing, I thought it was interesting because I bought them and now they're way up. The worst performing sector of the S&P 500, and they're way up now. So a change in sentiment, right? So obviously people are paying attention now to home prices, home sales, mortgage rates. Okay. So if mortgage rates are coming down, people will be able to afford to buy a house instead of renting. Why is that a big deal? Well, if they are able to buy a house instead of rent, they'll buy something and they'll fix it up. Or the people that are selling it are going to fix it up. And so maybe they do things like, paint the house. So if you can think forward, you might want to buy Sherwin-Williams, the paint company. They're the big 800-pound gorilla in the U.S. market for paint. And they just reported some bad news and the stock is down 15%. Huh. Well, I wonder about next year. Will be people... If mortgage rates come back down, will people be buying houses? And if they're buying houses, will they paint them? And if so, where will the paint come from? 80% of Sherwin-Williams paint sales go to professional painters and not, Home Depot and Lowe's. Interesting though, right? How they're all connected. So anyways, Case Shiller, that's one thing that you want to watch. to see if mortgage rates are going up, that would be, in trouble. If mortgage rates are going down, that will probably pick up. Housing price index. Oh yeah, yep. API. Okay, but we're also interested in EIA, which is more like Wednesday. Is OPEC in here? I guess OPEC is what, the first. It's pretty early in the. It must be Wednesday. Is it Wednesday as well? OPEC and EIA. Wow, crazy. We're just busy here. Busy. Okay. Kiwi jobs. Remember, Kiwi is really hot right now. So that's going to be a doozy. Okay. Yeah, mortgage applications, ADP, JOLTS. Look at this. It's just crazy. So what is ADP? Those are the number of pay stubs, right? In particular, the change in pay stubs that ADP does for small and medium-sized businesses that cannot afford to have an HR department. So they're an HR department for small and medium-sized businesses. So are small and medium-sized businesses adding jobs or cutting jobs? And then right here, later in the day, it's the number of help wanted ads to try to predict the future. So JOLTS is important. How do I know that people actually care about JOLTS? Remember, this is Wednesday, so this comes out before the Fed meeting. Will the Fed include this at the last second in their conversation? Is JOLTS important? Does the Fed care about JOLTS? Well, while doing my master's degree, my professor was an acting, like his full-time job was not a Harvard professor. It was senior economist at the Boston Fed. And he spent a whole day talking about JOLTS. So I'm like, yep, I think it's important to him. Otherwise, he wouldn't cover it. What a waste of time. So, yeah, I think they might squeeze that in. So it's listed here as low, but it might be something the Fed is watching. It might predict maybe in some cases future layoffs. If, like, for example, if you're trying to hire people, you're not going to lay off the people you have, right? So anyway, so we'll see if that might be a sign of like demand destruction. Manufacturing, PMI, like, dude, this is crazy important stuff. EIA, and then the Fed meeting. Okay? Wow. Okay? Oh, and we should rewind here. Well, you know what? I covered it in the day trading group and the swing trading group. So I'll just leave it at that. There's something coming up that's not on this calendar or whatever calendar you're using that's going to rock the Japanese yen. It's going to be a big surprise. It's not on this calendar. It's going to surprise everybody. And so we've already covered that in the day trading group and the swing trading group. So they already know. And that's maybe a benefit of joining the groups. You should know. All right. So right now we're into Thursday. Okay. And you have, okay, Bank of England. Okay. BOE. Okay. Here's the challenger that I like to use for non-farm payrolls. So that's got to be updated. The last estimate that I have is about 35,000 job cuts on that. It's on the challenger. Okay. And then, isn't ECB in here? Am I wrong on that? Don't we have an ECB as well as a BOE? Is it just not on here? Or am I missing it? Is it only BOE? Wait. Isn't it ECB too? Yeah, isn't it ECB on Thursday? Yeah, so it's not even on the calendar. So you got to just know this stuff, huh? February 2nd. Yeah, all right. So Bank of England and ECB, just like, holy smokes. Holy smokes. I mean, this week is insane. Insane. Friday, obviously, the focus is going to be on non-farm payrolls. And then on Sunday, the embargo on Russian oil by the European Union takes effect. Wow, like I'm exhausted just thinking about it. So today is the calm before the storm. Okay, today is the calm before the storm. And one would assume, I talked about this last night, because the day trade group meets Sunday evenings to prepare for the week. One of the things I said is all the trends are definitely up, right? But it seems to me that a prudent investor should be concerned about the Fed meeting on Wednesday. And they shouldn't be adding trades now. With all this risk this week of all kinds of things can go haywire this week. Hundreds of companies are reporting earnings, but more importantly, their future projections or their future guidance. And all this concern about, energy prices. And then 3 central banks, like just that, but there's more. Like it's crazy. So what do you do now? Start adding to risk? Gee whiz, I find that hard to believe. So I would guess, truly guess, that there should be a little bit of risk off today. And that's kind of what I see in many of the cases. So we'll look through it. But it might just be people, starting to hold their breath. So we'll go through all the stock markets. All right, so what do you think about the poll? Have you had a chance to answer the poll? It's interesting. All right. How much did India increase its purchases of oil from Russia? 33%? 333%? 3,333%? Or just 3%? I don't know why I put it in that order. I guess the order of votes. 12% of you answered correctly. Over the 5-year average, India has increased the amount of imports of oil from Russia by 3,333%. Yes, 33 times more oil. And what are they going to do with it? First of all, wow, huh? Wowzer. So what are they going to do with it? They're going to refine it into diesel. Yep. Try to address the distillates shortage that we're going through. That's something else, huh? That's really something else. So as of next week, Europe will not be able to buy anything from Russia. But they'll buy Russian oil that India purchased and then convert it into diesel. So they'll buy diesel from India, but don't call it Russian. So good job, Europe. India appreciates you. That's a good policy. Yeah, Russia's really crying because they have to. Now, what's being reported is India is buying it for 20% less, but then if you talk to India, they'll tell you that that's not actually the case. Also, the cost of moving the oil from Russia to India has gone up quite a bit. So the Indians will argue that, yes, maybe if you think they're getting a 20% discount, what the Indians will tell you is, well, it's more like a 10% discount, but it costs 10% more to get it from Russia to India, so that they're not really getting a discount. And then they'll say, well, what they're trying to do is then refine the oil into diesel and, help their European trading partners that will be in a shortage situation. Okay, cool. And so let's say Russia did sell it for somewhere between 10 or 20% cheaper. Do you think it really bothers them that much? No. And also what they could do is they could cut back a little bit and push up oil prices up 10%. So they're selling for 10% less, but for 10% more. And they're like, that's just fine by us. So for example, just to get the math better, if Russia shocked the world and said they're cutting exports by 50%, and because of that, because there's such an important part of producing energy for the entire world. So again, Russia announces that they're going to cut exports by 50% and the price doubles, then nothing financially changes for Russia. They sell half as much at twice as much, but then they run out of oil at half the speed. Okay? So anyways, now Rookie says India needs to feed its population. Yeah, and so that's the next concern. What if India doesn't export the diesel and instead keeps it for itself? By the way, I've been saying this a long time, and I think we're really at the precipice of this change. India is the future. So if you're young, if you're 20-something and you're interested in finance and investing and you want to become a big global player one day, and you listen to the old white men that are filthy, stinking rich, and they're like, we invested into China in 1990 and we made billions. Your play is India. Okay? And you probably don't need to learn Hindi like you need to learn Chinese if you're going to live and invest in China. You can get by in India with English. Wouldn't hurt to speak Hindi, but nonetheless, its population growth has made it, or soon, very, very, very soon, like we're just a month away or a couple of months away from the population of India being larger than China. But that's not because their population is out of control. It's because China's is contracting because of the one-child policy exponentially too. So India, its rate of population growth is also collapsing. But the total absolute population will surpass soon China, but Indian families don't have 7 or 8 kids anymore because they're not working in the farmer's field, right? They're educated, they're living in cities, and so the family size is falling, education levels are rising, child mortality is falling, and their economy is becoming more and more sophisticated. Now, I haven't been to India for probably, I don't even know now, 10 years. And it's an amazing place, but it needs infrastructure. It needs investment. And it's going through amazing changes. So again, my advice, if you're 20 something and you're like, what am I going to do with the rest of my life? And how do I make $1 billion? Okay. You probably need to think about India. Huh? So 10 or 12 years ago, a very wealthy friend of mine, roughly my age, he's a little bit younger than me, he moved to Shanghai. Yeah. Did really well. And then he moved to Dubai. Why? These are places to make money. So just because you were born in Timbuktu doesn't mean you have to stay. Oh, your neighbors will stay. Your family will stay. Your friends will stay. Most people don't leave very far from their high school. You can get on a plane and go anywhere in the world in a day. It's an amazing time to be alive. Go get it done. The world needs you. All right. So anyways, look, that's amazing, huh? Look at that. 3,333%. Take a look at, let's do the stock market. Stock indices. We'll look at them like a leading indicator. Luis is like, sky's the limit. Absolutely. I mean, you got to make some choices. Like, it seems to me, and don't get mad at me, but it seems to me Central and South America are going, they don't say socialist anymore, but let's say populist. That's a deal killer for me. So like, well, that's too bad. I love the Central and South American cultures and food. All that, you know, like I want those civilizations, if you will, to succeed. But if you go socialist pig dog, I'm absolutely convinced 1,000 times over it's a mistake. So I'm like, that's really too bad. Okay? I'm like, it's really too bad. I would love to invest into Chile. I would love to invest into Brazil. I'd love to invest into Argentina, Honduras and El Salvador, and okay, well, maybe not first. Colombia would probably be a really cool place to invest. Panama's amazing, right? All these places. But if you go socialist pig dog, then I have to say, well, I'm a capitalist pig dog. So I'm like, well, I'm going to go to India then. Because the one thing I know about every single Indian friend I have, and I have many Indian friends, they're entrepreneurs. They're hardworking. They're smart. They're not just smart, they're savvy. You know, like, dude, India is going to kick butt. Kick butt. So that's where you got to go, yo. And China has already kicked butt. China is an amazing place. But India's next. Trucking Mogul says, do you think Africa is stable enough to invest in? The first thing I need to say is I don't know enough to give you a definitive answer. Yes, I've been to South Africa for 3 days. So let me tell you everything about Africa, right? I can't say that. But, oh, the potential is unbelievable. The potential is unbelievable. So it's more like, you know, I can give you kind of my wishes. my hopes. But I don't know enough, but it felt to me when I was in South Africa that the potential was amazing, but everything was overly complicated. And that's just not, it doesn't attract capital if everything is complicated. So you're like, dude, I don't know. And of course, have I left? Did I really leave Johannesburg? Have I traveled and gone to small towns? And have I crossed the border and checked out the neighbors? And no, so I don't really know enough. But the stories that I've heard, not from my visit to South Africa, but my stories of the few people I know that have done business sort of in Central Africa and other parts of Africa. Some of the stories are good, but a lot of the stories are bad. So I don't know, but I need to know more. But it's sort of, I lean to the side of doubt, but I have this tremendous hope. Right? A younger population, lots of natural resources, low wages. You would expect that catch-up growth. If you've done the macroeconomics course, I talk about this, the difference between mature growth and catch-up growth and all that kind of stuff. The table is set for excellence, but I don't know if it's going to go down that way. And right now, a lot of Middle Eastern investments going into different parts of Africa, but they expect 1,000% return on investment, where the Chinese are coming in and they just want the resources. They don't care about a return on investment, and they don't care about the people. So then where does that leave Africa in 50 years if China comes in and does all this stuff? I mean, think of it. They don't care about the people. They don't care about the local economy. They don't even care about a return on investment. All they want is the resources. So in 50 years, if they leave, the stuff they built is probably not built to last. And if there's no social infrastructure investment in education and jobs and skills and, labor to the alpha, if it's all just capital, if it leads to nothing. One of the things I think of, and I forget which African country, but the Belgians went in and raped and pillaged, and then they built this big city with railroad stations and hydroelectric dams, and they built universities with giant libraries, but it wasn't really for the locals. It was all for the Belgians, right? And all under the Belgian king's point of view, and they built all of this stuff, but it wasn't for the locals. And then eventually the Belgians left, and all that stuff just turned back to jungle. just literally everything's just gone. It looks like an ancient civilization, and it's just gone. And is China going to come in, build all these things so that they can rape the land of their natural resources and then go away? And then 50, 100 years from now, that local civilization has no return on investment. They just lost all their natural resources. So I worry. I have worries. Emmanuel says corruption in Africa makes it hard to invest. Well, two things. Yes, that's part of the friction, I would say, to investing. That when I say things are complicated, everything's complicated, that would be part of it. But to be fair, there's a lot of corruption everywhere, even in the United States. The United States is ranked pretty high on the corruption scale. Somebody tracks this and reports it somehow. And the United States is pretty high. If you're going to start a nightclub in America, you probably have to bribe a whole bunch of people. The fire department has to say yes to you, and then the local neighborhood has to say yes to you. So, we don't call it bribes, but you're you have to put in additional lighting in the neighborhood, and you have to build a parking lot, and then you have to put some money into building a park somewhere. And you're dude, I just want to have a nightclub and sell ecstasy like everybody else. No, everybody needs some love, right? So we don't call it bribing, but you get taxed, let's say, right? You get taxed. So, just to be fair to Africa, but it's more blatant in certain economies than others, but it's there. We call it lobbying, not bribing. Oh, I'm not bribing the senator. I'm just letting him fly around in my private jet with his girlfriend and hiding it from his wife. But it's not bribing. He's on my yacht in the Caribbean this weekend. And nobody knows. But it's not a bribe. We're friends. All right? So that's how America works. For example, that's even a true story. Forbes, the magazine? Well, it's actually a family, the Forbes. And they bought this giant yacht back in the 1950s or 60s. I think it was Jackie O's. It used to be owned by the Kennedys, right? And then Jackie O got it, and then she sold it, and the Forbes family bought it. I think that's the lineage. I might be way off, but just imagine the Forbes family owned this huge yacht. In today's equivalent, imagine you bought $100 million boat, ship, right? Just imagine something like that. It's crazy big, crazy luxurious, right? And the family never uses it. But famous and powerful people, more powerful than famous. Let's just say very powerful, and I would imagine mostly men, powerful men of business and finance, economics, and politics. Spend a lot of time on this boat. Literally, there are people staying on it 24/7, 7 days a week. There's a full staff of 30 people taking care of this boat. And the Forbes family never uses it, ever. They go years without stepping foot on this ship. But it's always being used. Now, why do they do that? Is that bribing? And you imagine this has gone on for decades. Okay. So anywho, Richard says, as an international investor, you don't want to loan money in Africa. Well, I have stories, I know people that have done a lot of business in Ghana. Ghana is complicated and it's dangerous. It's a dangerous place. Literally you could be robbed, but also swindled where, the old switcheroo kind of stuff. There's every living person will, and this is unfair to people that live in Ghana, but from the point of view that someone's moving around millions of dollars worth of assets, like gold, every single person on that supply chain is going to try to scam you. Very dangerous. Either just flat out rob you or switch you or skim you or require a bribe from you. But I have many, many, many stories I've been told by people that actually put boots on the ground and all that kind of stuff, moving millions. And some of the deals that you hear is where you start a local joint venture and you put $1 million or whatever, let's say, into this joint venture, and things are going well and you're making money and that's great. And everyone that needs to get paid gets paid. And then you decide to, you turned 1 million into 5 million and you're like, okay, I want to bring $1 million home and pay myself. I want to pull my $1 million out. Oh, well, you can't. You have a maximum of 100,000. See, you did a business deal, but you didn't understand the banking rules for a foreign investor, which is outlined in government, government control. So you find out I'm going to bring, $1 million or $2 million home, right? And they're like, no, you can't do that. Well, if you had known, you wouldn't have put millions in because they're like, you can't take it out. All this money and you're going to turn $1 million into 5 million or 10 million. It's just not, you can't ever bring it home. So what's the point? Right? And then, maybe you got to bribe someone so it can be done, or then you got to do something a little more illegal and try to get the money across the border some other way. And then all of a sudden everything's nefarious. And you're like, you know what? I don't need this crap. I can just invest into India. Right. And that's what happens. But the dream that everyone's doing, in particular in Ghana, is you can buy gold at a discount, but to lift it is very complicated. Even just to get it assayed is very risky. So you get your gold, then you have it assayed, and then you got to lift it, and then get it to Dubai. And the cool thing is, if you can get it to Dubai, you can just turn it to cash. Not a problem. Super easy, right? The other part is the difficult part, and you don't ever seem to be able to turn a huge profit doing it, but lots of people try. And after a while, you're like, nah, I'm just going to do something better with my time and my money. Yeah, and that's how money works. You're going to look at friction. If I invest money here, what's the upside? What are the frictions? Oh, well, it's dangerous. You can be robbed. It can be stolen. You got to bribe everybody. You can be swindled. You can be taxed. You won't be able to remove the money. And you're like, that's 9 risks. You're like, I just found 9 bullet points why I could put $1 million in and lose the entire $1 million. Or I can just buy some treasuries and earn 4%. You're like, So that's how money works. You don't want the frictions. Frictions are costs. Costs are risks, and risks are bad. All right. So let's go through and take a look at these stock indices and see what we can learn. Okay. Okay, we have a technical cluster on the S&P 500. Okay. So if you're a bear, and I am a bear, it's the beginning of something interesting. But remember, I think technicals have very low validity for this week based on the almost unprecedented. This is probably the biggest week I've ever seen. So this could be way higher, way lower, and it wouldn't be because of this technical analysis. But nonetheless, let's try to do technical analysis on the quietest day of this crazy week. Bulls are going to buy down in here. Okay, this is factual truth. This area from here to here is my buy zone. Okay, that's my buy zone. So if you're going to buy it, that's it. So as a seller, I'm definitely not going to sell there. But if you want to take this higher one more, and I get it, man. I'm not disagreeing with that at all. Even if I'm a bear, that's legit, man. That's your weekly move, but you're out of position monthly. Richard just found out my meaning of M1 and M2. Dude, why don't you join FX Bootcamp? It's $88. You have $88, Richard. Take the course. You'll be tickled pink with the amount of information. Yeah. But who cares what the meaning is? You have to understand like what the name is or what the math is in that case, but you have to understand where they fit in strategy, right? Oh, I see. Okay, you got it. Yeah. So like it in the context of strategy, it has meaning. Okay. So for a bear, like let's put it this way, for a bear, that is a monthly sell. So what's the equal and opposite buying for a bull? Dude, it's way the frick down there. Oh God. On a monthly basis. You're like, dude, that's below 4,000, like by a lot. That's 3,900. You're like, you might say if you're a bull, you're like, dude, we're not going to fall to 3,900. This is ripper awesome. Okay, what's the next bullish buying price? Right here, basically 4,000, a little bit lower than 4,000. So on a monthly basis, this is the whole buy zone. You understand that? Buy. But the weekly is over here. Buy. So this ends up being a plan A, plan B for you as a bull. You understand that? So if you're a bull, plan A, boom, that's what you're doing this week. If you take it, make sure you use a stop. And don't be shocked if you make a ton of money quick or the whole thing collapses on you, and probably quickly as well. Okay? But and this is advice to everybody, don't be shocked if we have a massive, crazy week where we have extreme highs, extreme lows, back to extreme highs, back to extreme lows. The chance for cross currents here is extraordinary. For example, the Fed cuts by 25 basis points. Oh my God, boo! We get a big rally in the S&P500. But then half an hour later, Jerome Powell says, you know what? We slowed the rate, but we haven't even discussed stopping. We're going to continue raising, maybe only at 25 basis points, but for many more months. We haven't even discussed a pause. It's not even on the agenda. It's not in the conversation. You won't find it in the meeting minutes. We are not going to stop. Boom, S&P 500 crashes. Then on non-farm payrolls, instead of coming out 200,000, it comes out 75,000. Stock market rallies again. Dude, that's just one likely scenario. Like, that's not that far off. Would you agree? We get a slowdown, but not a pause. Followed by a bad non-farm payrolls. And then, and all of a sudden we're all over the place. Huh? Like, that is probably, I don't think non-farm payrolls is going to be that bad. If you look at weekly jobless claims, it just doesn't look that way. So NFP will be about as expected. But this up and down, the other thing that could happen, it seems unlikely. See, I say the Fed raises by 50 basis points, but less than 1% of the world thinks that. So I'm the idiot. I admit that. It's okay. I've just looked at the numbers and that is what I see. Okay, so I could be the idiot. That's fine. My goal is not to lose 10% when I'm wrong. So we'll see and I'll regroup. But I look at it, I'm like, you know what? They should still go by 50 basis points, but whatever. Doesn't matter really that much. But what if I'm right? You'll get one of these things. Think of it. What happens to the S&P 500 if 99% of institutional investors, both bond and stock investors, 99% of them are wrong? Holy schnicker schnocker. You see? Oh my God. Oh God, as Kanye would say. Oh God. Okay. So, holy smokes. Or I guess it could even just do this. It would go up, down, and then the bulls come back and you get your monthly position trade, right? Like, oh my God. This can do so many different things this week. like home prices could fall, and maybe that's good or bad. Mortgage applications could rise or fall. Maybe that's a sign of good or bad. How about non-farm payrolls is okay, but hourly earnings are down. Oh, God, right? Once again, a subcomponent can move this market. There's so much complexity to this one, where just a few months ago, it was almost like non-farm payrolls was dead. Like, it didn't matter. Fed was going to raise. It didn't matter. Now it's like, I think the reason it matters so much is that a lot of the market has bet this way. And I can argue, the counter argue to that is, well, what if it was a double top? Huh? So remember, we expected this move, and we pretty much expected this one. Where I was wrong is I expected this. But does that make me like crazy wrong, stupid wrong, negligent wrong? No, because I think the way we typically set these things up is it's going to be a lower high or a double top. So I'm still on the bandwagon where, yeah, this could be a double top. I might have to switch teams, but I'll only do it when I see a change in the economic data. I might have to switch as far as being short-term long and try to pick up some pips, but I'm really just hedging. Also, it's really not that bad for me because I own a lot of the stock market. So I'd be making money. I just have to, if we're making higher highs here, I have to exit my hedge. That's all. Okay. Hey, man, it's only money, but I love it. I still have this dream one day that maybe I'll run a bar or invest into building a bar and have other people run it. But you know how you walk into a bar and they have 27,000 TVs all over the place, all TVs everywhere with sports on? I want to walk in and it's money, it's charts, it's CNBC and Bloomberg and others like my trading rig behind me. And it's all finance, economics, and trading. And everybody in this bar has a good time. They have good friends. They have good conversation. And everybody is unbelievably astute about money, not sports. Not sports. Money. Everybody sits around and talks about money all day. What are you doing with your retirement account? How are you improving your what are your tax strategies? What are you investing in now? What are you thinking about next year? What about this and what about that? And are you doing this? Just all you do all day is talk about money. Jordan's like, I don't drink, but I love money. Hey, fair enough. Have some buffalo wings, Jordan. So anyway, watch where we are in the context of technical analysis. What this chart says on the daily is we're going to come down back below 4,000 or about 4,000. Right now, my numbers say 39.71. It'll probably be the daily 21, and then it'll probably come up, and then maybe the Fed shocks the world. And we get one of these things. And that's kind of my base case. Okay? It's kind of my base case. Also, to be clear, I don't think in the first half we'll have a disastrous stock market where this goes to 3,000 or 2,000. No. So in my annual outlook, which has now been removed, thank you for attending that, by the way, the focus was on the second half. Because one of the things I was looking at is for bad news to trickle in. We're not there yet. Do you remember the 2008 financial crisis? We would have a non-farm payrolls that would come out and it'd be negative 400,000. Negative 200,000. Negative 200,000. So right now we're worried about a recession. And I'm like, dude, what recession? A year has gone by and we still have the same employment level. The unemployment rate hasn't gone down. Wages are going up. Like, we're not going to get a recession like that. I know people with jobs. I know it's weird, but I know a few people with jobs, and they are getting raises. They are getting, so wages are going up. That's inflation. Unemployment's not going down. The one hope is that mortgages come down enough that people can start buying houses again. But also that's inflationary because that pushes up housing prices. Because here's kind of the truth behind the housing market right now. Yes, high interest rates make mortgages more expensive. So you might have to buy a smaller house. Hey, if you had the money or if you were a little bit more in tune to economics, you could have bought a year and a half ago and just made a killing. But now you want to buy, and you're going to have to pay more for the house, and you're going to have to pay, in particular, more to borrow the money for the house. You're going to get less house. Well, you could have been smarter and bought a year or two ago. Well, now you know, but whatever. That's just a consequence. So, right? But here's the thing. If the economy improves a little bit over the next few years, people will leave the rental market and they'll buy. But here's the thing. We have 1 million houses less than we should. We have a million house shortage. Oh, God. There's not enough houses for sale. So in that case, I think sales will go up and down, but I don't think prices will budge that much unless, what? You don't have enough money to make your mortgage payment, so you have to sell your house, but people aren't buying because interest rates are too high. So then what do? Slash your price and drop it way below price so that you can sell your house quick because you can't afford your mortgage payment and you'll go into bankruptcy and therefore you don't get any return. So you're like, you know what? I just got to dump this thing. But what puts you in that situation? Is America in that situation where they're like, screw it, sell it at any price? No, we're not there, bro. Nobody's lost their job. Well, okay, 35,000 people have been laid off. Okay, well, we're not in a situation yet for that to happen, but maybe we will be, but in the future. So if layoffs keep going up, which means earnings are down, then the employment rate will fall, the unemployment rate will rise, the wage will fall. Okay, and so we have that component that needs to play out. And are we there yet? Well, that's what NFP is going to be about. And I have a feeling NFP is going to come out about average, about as expected. And then we're going to look at wages and hours worked. And I think they'll be about the same. And from my, for my survey, which means a couple of people, they got raises this year. So I didn't survey millions of people. I know a couple of people, and they got raises simply because of inflation. So I don't see wage inflation coming down. Huh? So, not perfect, but it's something. Okay. So anyways, watch that. These other ones, the German stock market was down but popped. The Euro 50 was down, now is popping off the 55. But remember, on a 4-hour, that's a potential reversal signal. On this 4-hour on the DAX, it went lower than the 55. So you know what? This is a sell zone. If I was a bear on the German stock market today, I'd be stinking about selling. Probably right at 15,100, practically where we are right now. That's what I would stink. Okay. NASDAQ's still red hot. Okay. FTSE trying to double bottom. But look, it's not, the moving average on the 4 hours not telling you anything. So that's kind of like leave it. Remember, they're going to jack up interest rates, right? They're going to go 50 basis points. I think both Euro and the ECB and the BOE, I think they're going to go 50 basis points. So if the Fed only goes 25, you'll probably want to be long pound dollar, long euro dollar. Yeah, that just happened. Okay. So now, looking at my WTI, what I've been reporting over the last 3 weeks, maybe, is that if you look at the normal levels of inventories for crude, so that's what a year looks like, and our inventories looked like this, and now it looks like this. So one could argue it's still low, and I believe the number is it's 20% low than what it should be or what the 5-year average would be, but it's not dangerously low. So this is the range, okay? This yellow zone is a range. Consider it like, let's say, this is the 5-year average, and then the yellow zones are the standard deviation above and below the average for levels of an inventory over a period of time, which would be 1 year. And that there's seasonality to the ebb and flow of inventory buildup and inventory destruction because you're converting crude oil into a product, right? And so for a very long time, we've had way significantly low levels of inventory, like dangerous levels. And right now we're below average, but okay. And that kind of gets me to, I'm a long-term bull on energy, all kinds of energy, but I'm in this world of caution right now. But I'm interested in everything from oil, nat gas, nuclear. I'm not that big on things like solar and wind, but solar makes sense to me. Solar costs, by the way, are way down, and with the Inflation Reduction Act out of Congress, which is actually has nothing to do with inflation, it's the Green Energy Act. demand for solar is up. Cost for solar right now is down. And the solar industry is expected to grow somewhere between 13 and 20% this year. So maybe it is a good investment. But right now, there's a lot of room for conventional to do pretty well, I think, still. But right now, the United States is producing a lot of oil, and we are rebuilding our inventories. Okay. But will that translate into better performing economy? Well, we're trying to get inflation down. The government has flooded the market with oil. Even if they got a fair price for it, they flooded it. They jacked up global supply of energy, dropped gasoline prices from $5 down to $2.50. And now it's like $3.50. We've had 4 or 5 weeks in a row of gasoline prices going up, diesel prices going up. And that's inflationary. And if Americans produce a lot of energy, you're like, well, wouldn't that just lower prices because we'd have excess inventories? Well, only if it stayed in the United States. So if we take all these products and sell them to the Europeans for twice as much, well, that leaves us with less here. You see? So it depends on where it goes. So oil's going to get complicated on the short run. On the long run, well, it really depends. When are we going to refill the SPR? Remember, we destroyed, if you will, 200 million barrels of oil that we just had just in case. So our rainy day fund has been cut in half. And we can't even replenish it with our own oil. So, okay. Okay. Refineries, by the way, have been running as high as 95% capacity and utilization numbers. We're now down at 85. I guess because we've had somewhat several weeks of a build in inventory. So that's cool. But if rig count starts falling, think of that. Rig count starts falling and production falls. So like I know for a fact, for example, right now the United States every day produces 12.2 million barrels per day. And if you're like, well, Wayne, that's meaningless to me. I don't understand the context. Is that high or is that low? That's record high. The United States has been producing oil for 100 years. That is ridiculously high number. No shortage of oil here. We just don't have it in inventory. We might be selling it to somebody else. Okay? But it'd be interesting if this somehow started slowly dropping over the next, let's say, year, down to 10.2 or 10, right? That's still a big number, but that'd be interesting if our production drops by, I know that's not 20%, but let's just pretend it's 20%. How do we build our inventories? Or if we decide to somehow blend our West Texas Intermediate, look, there's WTI, West Texas Intermediate, but much of the oil from the Permian Basin and other, basins around are fracked. They're fracked. So you have this intermediate, but then you have this light. And then from Canada, you got this heavy. So you get, so what we might want to do is start blending our light with the heavy and use this for creating products like jet. There's going to be a shortage of jet fuel. There's going to be a shortage of diesel. I think gasoline will be okay. So we can make all this distillate out of, WTI, but then we got to take like from this Canadian oil and mix it with the US oil. I'm just going to put CAD and USD. And all that goes into the SPR. Or you dump all the WTI in there, and then what? And then you got to blend. But that's risky, because what if there's a pipeline break and you can't get enough Canadian oil? So see, you can't do the other strategy. You just can't do it. So you're like, okay, we're going to use our my WTI. We're going to live off of this stuff. And then we're going to buy Canadian oil. And we're going to blend it with our fracking production. And you take heavy and light, mix them together. You get a medium or intermediate type crude, and you retap the SPR. And even if you only put 50% of it back, that's 100 million barrels. Well, so how much of that could you possibly do a week? 5? 2? Like, would it take a year to put half of it back? Yeah, it might take 2 years. But then that oil's not on the market. Huh? So anyways, boy, this is going to get interesting. So what I have marked here is, if you are a bull, this is a logical place to think about maybe buying again. Okay, so that's going to be your play. So you should wake up, smell the coffee. And your next buying zone is way lower. Psychologically, maybe 75. But are we trading psychologically? Yeah, sometimes. But I think the real number is 74 to 73. You know what I'm talking about? So you're going to mark that out this way. And that would not be a bullish, okay? Brent is European oil. Think of it as North Sea oil. Okay, Spencer? But there is actually dozens of oil. So I gave you a statistic about Indian purchases of Russian oil. Well, the thing is, it's not sold that way, right? So you have to look into that. And so Saudi, I think I tried to do this. Let's see if I think I tried to do this a while ago and tried to find something. Hang on. Why can't I ever find this? It's like Google seems to be so American. So if you try to find something outside the normal ranks of American focus, then all of a sudden it can't find anything. Maybe it's just me. it's just finding nothing. Well, let me hang on. I want to try. If I can find something, I'll show it. If not, it's just me babbling, but that's okay. You're used to that. I want to try to show you energy prices. So maybe I'll find it on oil price. I don't think it's going to show me a good. Okay, yeah, this is what I was looking for. All right, so let me show you this. Okay, WTI crude, 78.5. Brent, 85.5. That spread is normal. Look at all this other oil. These are all oils that you can purchase. So, for example, why is this interesting? Well, if America only had fracking oil, which is lighter, it's too light to make certain products. So I think you can make gasoline, but you can't make diesel. And you're like, well, dude, we need some diesel. Okay, so one of the things I cover in the oil trading course is then you blend it. So you need something heavier. Well, you also might be worried, depending on the product, like diesel, but maybe you want to make jet fuel, or maybe you want to make plastic, or, whatever. There's all kinds of products you might want to make. You might want to make Vaseline, all right? So you need a certain blend. So, right, a refinery is going to blend these different types of oil into exactly what you need. So you're like, I need diesel. But in the United States, you're only allowed a certain level of sulfur. So you're like, okay, I need a heavier crude, maybe not too heavy. So it has to have just the right level of viscosity to blend with your oil. And it can't have too much sulfur in it. So now you got to go like, you need heavy and light. Okay, and you're like, okay, because there's light and there's sweet and there's sour. So you want heavy sweet, and so you might find that comes from Angola. I don't know. Okay. Okay. So Arab extra light. So imagine when they drilled these wells, oil and a lot of natural gas came out. That's right. Nat gas gap down today. Yeah, I covered that last night, actually. We had talked about that last night in the day trading group. So I'd say yesterday. Zarif. But anyways. So isn't it interesting? So you're like, what's the price of oil? Well, notice all their different prices. Now, if you're interested in this, you could be trading the spread between these if you knew a little bit more, right? So look at Urals. That's your Russian oil selling at less than 55. Well, what the frick? So remember I was talking about earlier, $20 spread. We were talking about this earlier today, that there seems to be a $20 discount because the only people in the world buying this is India. And that might look that way, but the price might be low because it costs extra money to ship it from Russia to India. You're like, why would it cost extra money? Because part of the ban is being able to get insurance. And so if you have to pay more for the insurance, you have to pay less for the oil. And Russia has to decide, well, will it sell it at 55? If India has to pay $10 extra for insurance than normal, Maybe there's a shortage of boats because China's got a bunch of oil floating off the coast. So maybe you have to pay more for the ships. You got to pay more for the insurance. So you got to pay less for the commodity. You see how it all works out? So India is arguing, hey, by the time this stuff gets to India, we're paying $80 just like everybody else. Okay? But that's where I get this when I say, hey, India's got a 20% discount. Well, that's what it looks like, but it's not necessarily true. Cool, right? And did you know they are already drilling oil and gas on Mars? Did you know that? It's amazing. Yeah, the Boring Company, run by Elon Musk, is already drilling oil on Mars. That's what the Boring Company does. It bores well holes. You better be careful. You better be careful what you hear on YouTube. Remember, you don't have to be an expert. You don't have to be educated. You don't have to have any experience to stream on YouTube. Of course, that's all bullshit. Yeah. It's all bullshit. No, the Boring Company doesn't drill oil holes. Elon Musk is not sending the Boring Company to Mars. Mars doesn't have any oil. It doesn't even have carbon, or very little. So anyways, just be careful what you hear on YouTube. I honestly try to give you what I think is the truth and try to get you to expand your mind and focus and all that and know more so you can make better decisions and all that. And I'm really worried that when you're done my live stream, you go to some kid that's bragging he's got 4 or 5 years of trading experience and he starts babbling out a bunch of crap that is probably somewhat true, but very much not accurate. But it seems right because he's only been trading for 4 years. So I worry that you get wrong messages in other places. Right? So anyways. Cool, huh? So, for example, let's talk about this. Why is Arab heavy less? Why does Arab heavy cost less than medium and light? Why does light cost more than medium? And why does medium cost more than heavy? Bueller? It's not harder to refine. It just costs more to refine. That's it. Just costs more. Yeah. So you can see how they all just kind of work out. It's not random stuff, guys. You're trying to figure out, okay, you're going to make gasoline. So you need to buy a bunch of crude. And they're all somewhat related to how much you can sell gasoline for. So therefore, there's a supply and demand. And you're just going to buy less Arab heavy. So they have to lower their price to try to attract you to buy it. And the one that's the easiest costs the most because you're like, dude, I want to get a whole bunch of light because it's super easy and super cheap to turn into gasoline. But you could also maybe start blending some of these things and well, maybe if Arab Heavy is cheap enough relative to my expense of refining it into gasoline and other products, well, maybe that's actually a better deal. And what will happen is there's a theory of one price, okay? And if you want to study the history of these things, okay, study Rousseau. Has anyone read Rousseau? I was having a conversation with my daughter about Rousseau and Locke at the dinner table not long ago. Oh, it made me so happy. Huh? So happy. Jean-Jacques Rousseau? Is it this guy? Let's see if this is the right guy. Yeah, 200%. Yeah, so anyway, so I got a funny education because I have a funny way of thinking, I don't know. I'm a funny guy. So I have a funny education. So anywho, so I did study Rousseau from the point of an investor, from the point of money. So anyways, Rousseau is a philosopher from the 1700s. Okay? He was also a writer and a composer. His political philosophy influenced the progress of the Age of Enlightenment throughout Europe. Okay? He wrote about inequality. He's part of the crew that came up with this idea of social contract. So if you go back to John Locke, he was focused on private property. And he said the only thing you need a government for is to have a police force and an army, because if foreigners try to take your crap, you can defend your crap, your stuff, your private property, your house, your wealth, whatever, your person, right? And if you needed a police force, it was just in case your neighbor tried to take your stuff. And then John Locke, if you argued with him, he said, okay, some schools are great, but I don't need to pay for a school if I don't have a kid. And he might say, okay, well, if your house burns down, you should pay for the fire department, but not every person in society needs to pay for the fire department. You should pay for it if you use it. And if I don't want to pay for it, I shouldn't have to pay for it. So that's John Locke. And the argument that they had back then is, I think it was walnuts. And this, John Locke is before Rousseau. And I'm getting there. But so what he said was, if I have walnuts and I produce way too many walnuts than I need, and my neighbor is hungry, I don't need to share my walnuts with my neighbor. They're my walnuts. Okay. So anyways, so Rousseau was part of the crew that came later and said, no, you sort of have a moral imperative to share and trade. If you have excess, why just let it rot? Why would you let your excess crops just rot in the field? You should share it and trade it, because we'll all be better off. You'll be better off. Your neighbor will be better off. And there's sort of this social contract comes out of that philosophy. But anyway, so you look at this, you're like, so what the hell, who cares, right? Who cares about this? He did the math. So I don't even know if it's going to talk about this. So you have to actually do the stuff. But the part that I like about Rousseau is he did the mathematics of rent. And he looked at all the different variables of what it cost to rent different types of land that would produce a crop like wheat. Because remember, most rent wasn't houses, it was land. Landlords rented their land to what? Serfs, right? Or, tenement farmers or whatever. So there was a rent. But what if you had good land, medium land, and bad land? Or a combination of is it close to town where you can sell your crops or farther away from town where you can sell your crops? Because there's a cost of moving the wheat back to the grain elevator to sell it. That was a cost. And that was a variable. But also you had a choice. Should you even be a farmer, or should you just get a job in the city or in the town? How much do jobs pay in that town? It all impacts the price of the rent. And you can calculate exactly what rent costs. For example, how much is Starbucks willing to pay rent for a location? They'll pay anything, any price is acceptable as long as every time they sell a latte, they make 20% profit. That's it. 20 cents, not 20%, 20 cents. So every single Starbucks in the world makes 20 cents per latte. And then they do the math based on the location and the traffic and all that kind of stuff. They do their own math. They'll sell X number of lattes per year. And then they do a calculation. Their margin has to be 20 cents per coffee. And based on the expected number of coffees, this is the expected amount of profit. So if they have to pay $10,000 or $100,000, it doesn't matter to them. It's all built into the coffee. You see? And that's how they do it. That's how Starbucks looks at it. They do the calculation and they're like, we don't care if it's $100,000 a month or $200,000. Our math says we're going to make 20 cents. Boom. So this, if you take this further, and the reason I'm explaining it is if you read Rousseau from 1750, he explained the math of how we get here. How the Saudi Arabian extra light, heavy, and medium gets to these prices. And it'll be the combination of demand and supply, of course, but really carrying costs like moving it to the refining facility, the costs that are required to refine it into a usable viscosity and blend. So like the heavy stuff, you probably have to run it through 2 heater treaters and do vertical separation once or twice to get the nat gas out of it, to get the water out of it, all that kind of stuff. There's all this other stuff in the heavy, but the light is almost good to go. So you start looking at this, and when you do the math, the law of one price should get here where you got this. In a similar way where you have farm A, farm B, and farm C, the best land is going to cost the most, the worst land is going to cost the least, and at the end of it, every farmer makes $5 a bushel. And that's the interesting thing. So anyways, so there's a little step back in history. And if you dig that, you're like, dude, that's really interesting. I love this stuff. But then the next thing you have to read is Karl Marx. Because after you read Rousseau and you start doing the math on rent, then Karl Marx came out and said rent is bad. And he was anti-rent. So you'd have to study Rousseau to understand rent, and then study somebody that said rent was bad, and then form your own opinion. See, rent to Marx was like usury from the Muslim point of view about charging interest for money. I took a whole class on Islamic finance. Okay, so when you get money for nothing, so you lend somebody money, you're not doing anything according to the Muslim point of view, so you shouldn't charge money. Now, I disagree with that, but that's the point of view. So you shouldn't earn interest on money because you're just lending it to somebody, but you're not doing anything. So how dare you ask for money in exchange? Same thing with rent. Okay, you bought a building and you have all these rooms and people need a place to live. Why don't you own the building? So why don't you just give it to these people for free? If you don't, like, let's say maybe you're allowed to charge rent, but by the time you pay down your mortgage, you'll own the building. Why don't you adjust it so rent is basically the cost of expense? So, right? So it only costs it might be a $12 million building, but maybe it only costs $100,000 a year to rent, to pay, or to maintain, to mow the lawn, to pay the insurance. So maybe it's only $120,000 a year. So you should drop rent from $5,000 a month to $500 a month. That's what Marx would say. Like, dude, you're not doing anything. Why should you get paid? So you would have to say, well, why shouldn't Starbucks, if they own their building, shouldn't they sell you a latte for 50 cents? That's a good one, Meta. Yeah. Now, many of these writers, by the way, were really fantastic writers. You can't imagine how educated these people were. Like Rousseau, like, oh, he was a musician and an artist and a writer and a philosopher. Oh, and he studied economics and sociology and, very often astronomy and all these different things. You're like, dude, these guys are crazy. And so he's writing on, inequality, economic inequality in society. Well, this is a concern in our society now. Not only did they study it and write about it, what's interesting is if you read the writing, they were beautiful writers. It was very elegant. And you're like, way better than what we teach now. So it's really amazing that in 1750, we were talking about the inequalities of society and economics and how should we deal with it? And here we are 250 years later, 300 years later, and we still have the same issues. But they were not new issues. They were known issues of capitalism. And Marx's point of view was capitalism is bad, so we should destroy the whole thing, and instead we should all share and all be equal. And the idea is, like, can't we all just be artists? We can sit and paint. Wouldn't we be happier than sitting and building machines all day or working in a factory all day? Why can't we just all be artists? We would be happier. Cool. Cool. All right. But think of the lack of productivity. Cool. You'll be happy. You just won't have any food. You won't, right? If no one's making clothes, you ain't going to have clothes. If nobody's farming food, you're not going to have any food. Why? Oh, well, we all want to be farmers, or we all want to be artists. And look, rent should be free, and food should be free, and everything. Now, that's not actually what he was saying, but you should actually study it. Cool, and that's why I like traveling, because we do have different points of view on how to run a society, and they are different choices, and there are many reasons for the different choices. Many of them are culturally based, and they are not incorrect. So you could travel the world. Like, let's say you made a lot of money trading Forex and you want to be a better investor. You could be like Jim Rogers. You take a year off and you travel the world and you're like, okay, what's the difference between Argentina and Brazil, or Argentina and Chile? Or what's the difference between Panama Honduras, El Salvador, Nicaragua. Go visit these places. And there'll be lots of similarities, but there'll be lots of differences. And you should be able to see, like, which one is a little bit more free market than the other one. Which one is a little bit more capitalist? Which one is a little bit less socialist? Which one is just straight up capitalist? And you start like walking the world and you start looking at the differences, not through a textbook, but you see it and you think, oh God, like it's apparent. And back then we didn't know. And that's the part I like about these philosophers. We didn't know. These were debates and arguments. They were philosophers. An economist was a philosopher. Think about that. Very interesting time to be alive because you could just get on a plane and go. So let us, we'll do some dollar and then we'll get out of here. I've taken too much of your time. Okay. Oops. Aussie dollar, that's a maybe on this. This is the first sign. I've already covered it, so I'll be brief. Okay, USD kitty cat based on that should be a little more up, but you know what? It ain't up yet. Okay, euro dollar based on Aussie dollar, you would think down. There's nothing but bullishness there. And I've taught you how to trade for many years, so I'm assuming you see all these things. Okay. That's an up, but if you want to be a bear, I also have this already drawn. You see it? Short-term trend is this way, but long-term trend is this way. So be careful. So if today does this, that's your head and shoulders pattern. Bada bing, bada boom. Okay? So be prepared for that. Okay? Could be. So if you're a bear, get ready. Because this ain't funny. My name's Mike D and I'm about to make money. Pulled out the jammy and aimed it at the sky. Okay, anyways. Sorry. Remember, they're jacking up by 50 this week. Okay, got to trap that. Kiwi buck. Kiwi's doing strong, but look at this. Oh, yeah. Oh, gone. Oh, gone. Yeah, we did this long time ago. Long time, huh? Okay. Cool. All right, so I'm going to leave you at that. Oh, my goodness, this is a big week. So thank you for being part of the community. We can go through this week together. The FOMC meeting, I'm going to make available to all members of FX Bootcamp. Video-only members, swing trading members, day trading members. We're all going to gather together to witness the FOMC interest rate decision and press conference. So if you are not an FX Bootcamp member, hey man, $88 a year. And I'll be shocked if you don't think it's worth $888. I am convinced in my soul that you get at least 10x your return on investment. At least. I think it's worth more than $888. I know because some people here have actually paid a couple of thousand. So anyways, now it's yours. So I hope you join the community. I'm bribing you. No, I'm lobbying you to join. I really want you to join so that I can do my best to help. Remember, non-farm payrolls is on Friday. I'll be at the FX Street YouTube channel. Okay. So very, 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 very interesting week. Tonight in the day trading group, we are going to be focused on the big, 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 big event that nobody's talking about. Okay? The big, 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 big event not on TV right now. The big, big, big event not on your calendar. There's a huge event that might lead to nothing, but could lead to something ginormous. It's like, what if you knew there was a 50% chance of a huge earthquake tonight? Or what if there was a 50% chance of a huge tsunami tonight? Or that there was a 50% chance a tornado was going to come down and hit your house? Would you want to be ready, willing, and able tonight? Cool. Well, that's what we're going to talk about in the day trading group. It's mad awesome. Crazy, unbelievably, hugely awesome. Cool. So, I'll see you later. Thanks for being in the community. Cheerio. Oh, hey, click the thumbs up button if you would. Cool. Cheers.